Hi, so the time now is 7 a.m. Singapore time. I hope I'm not too late to the party. This is basically the closest color to green that I can find in my wardrobe. But anyhow, I think I really just wanted to start the video with this meme over here. I'll just put it on the screen right here. I'm actually afraid that some of us have forgotten how far we've came with Alibaba and how far it has collapsed from its all-time highs. So in the grander scheme of things, I think pessimists actually do see an entire collapse of the Chinese stock market. But on the other hand, optimists, like myself, probably see a potential double bottom. So I'll leave you to be the judge for that. Now, you are probably searching for answers on the internet or wherever it is on whether Chinese stocks have truly bottomed. I think just to give you the answer straight, truth be told, I don't know. I have attempted to call the Chinese bottom 2 times now. First time was after the Chinese election. I think that time I got pretty lucky. But the second time, I was taken aback by the flip-flopping of government policies and the miscommunications amongst the senior officials. But anyhow, there were 2 main events last night that was driving the sentiments around Alibaba. Firstly, it's of course regarding the Chinese authority considering different measures to essentially stabilize the stock market with a 2 trillion yuan injection. That's roughly around $278 billion US dollars from the different offshore accounts of their state-owned enterprises. And the second main news is insiders, which is namely Jack Ma and Joseph Tsai. Both of them actually bought $200 million worth of Alibaba shares in Q4 of last year. So let's break down both. Firstly, let's talk about this entire idea of stabilizing the stock market. So if you have to consider it from both sides of the aisle, on the bearish camp, they say that China still have a lot of long-term structural issues, and this short-term rally, you can look at it as some sort of a short-term bounce from technical perspective, but it doesn't really solve the root cause of the problem. So on that front, the bears do get a point here. However, on a much more bullish stance, you might be wondering, hey, why are investors so easily convinced? And there's this childhood fairy tale called The Boy Who Cried Wolf. It's essentially not the first time where we see the Chinese government coming out with explicit supports, saying that they're going to support the digital economy, a lot of all these digital companies trying to promote healthy development. And 2 days after, they release a new draft regulations. I think all these are still deeply etched in the minds of investors. However, I do believe that a lot of people or a lot of money are waiting on the sidelines, waiting for signals from the government to essentially open the floodgates and the loosening of monetary and fiscal policies. So here's my simple read of how things have developed thus far. So there's a lot of speculation, a lot of people trying to trade around the news, a lot of money at the sidelines trying to take advantage of the volatility, and largely speaking, the Chinese government seems quite skeptical of the US ways of doing things. Basically just printing money, flooding the economy with money, flooding people with money, buying up all the random bonds and securities and whatnot. Yet at the same time, they cannot ignore the markets totally. So it kind of became a political problem some way along the lines. And you can see that the CSI 300, which is a benchmark China index, actually lost 1/3 of its value, while Hang Seng Index, which is the Hong Kong benchmark index, actually lost half of its value for 4 consecutive years now. So in total, I think the Chinese market has lost roughly $6.3 trillion since 2021. And if you were to compare the relative quantum in value, 6.3 trillion from the peak, and this current $300 billion stimulus into the Chinese stock market, it pretty much looks like a joke. But I guess what really matters is the posturing of the Chinese government, and that's basically what most investors are looking out for right now. I think in Chinese there's this term called 两头不到岸. In English, they're basically going nowhere. They're stuck between a rock and a hard place. On one hand, they need to resuscitate, they need to save the economy, save the stock market. On the other hand, they don't want people to be too reliant on thinking that the government will always save the day. At least for myself personally, I did make it publicly. I'm not adding, but neither am I trimming any of my Chinese positions. At least on a portfolio level, I'm still extremely overweight on Chinese stocks. So my focus will still be on corporate earnings in the coming few quarters ahead. So I'm not very interested with many of these price fluctuations and story building, even though I acknowledge the fact that, hey, it is gonna have a substantial impact in how my portfolio performs and whatnot.
Weeboo has been one of the trusted brokers that I personally use in my own investment journey. So I enjoy using their platform as they provide me with a seamless investing experience with user-friendly interface and, more importantly, custom layouts. So Weeboo has over 60 indicators and 12 charting tools to help me analyze the market trends. And sometimes We just want to get a better understanding and maybe some sort of a feel of how the price action chart is forming. And Weeboo's interface has been extremely intuitive. Also, they have their in-house screeners and alerts that I set so that I can be notified of any opportunities if Mr. Market decides to throw a tantrum without me needing to monitor it every single minute. So remember to try these helpful features on Weeboo today. So for those of you who are looking to consolidate your portfolio, Weeboo is currently running a transfer in campaign until the end of this month, where new and existing users can enjoy a transfer fee subsidy of up to $150, free Tesla shares worth up to $2,000, and 100 free commission trades for US stocks and options. So for new users, they even provide really attractive sign-up rewards too, and more details will be in the link down below. Thank you Weeboo for sponsoring this video.
Now, on the other hand, which is the second piece of news, where you have insiders buying, where Joseph Tsai and Jack Ma actually added around $200 million worth of Baba shares. So the bullish side of the camp will jump out and say that, oh, so there are many reasons why people will sell a stock, but there's probably only one reason why someone will buy a stock. That is probably because they expect the share price to appreciate. Well, on the other hand, you have the bearish side of the camp, basically saying that the Chinese government is forcing the hands of many of these insiders because they wish to stabilize the share price and to build back confidence again amongst investors. Personally, I think people are reading too much into this, and I completely understand because the Chinese market lacks transparency. It's very convoluted. That's why you have many analysts, many economists, many people on the sidelines trying to guess the motivations, trying to guess who's the mastermind, who's making the moves, etc, etc. So I think for people thinking along those lines, my suggestion is to not waste too much time on there. So there were commotions around China essentially scraping their video game regulations that was released a few weeks back, where it essentially caused the share price of NetEase and Tencent to tank quite substantially. Personally, I think that's a wrong read. I believe many of these video game draft regulations that was released to the public wouldn't disappear. They just removed it from the Chinese official website because time was up. They were saying that they're going to solicit feedback and opinion from industry players until the 22nd. That was why once the deadline was up, they actually removed the post. Looking at some of these Chinese social medias and how people have been explaining their position and stance on this entire video gaming crackdown, many of the gaming rules that was introduced in the draft regulations are actually quite popular amongst the locals. So I expect them to be implemented. However, there are probably some kinks and nuances that they have to adopt along the way. Still monitoring very closely the earnings of Tencent. I'm very interested in how it will affect their bottom line. So that's just my general take on Tencent thus far. Now, I also wish to share this very interesting discussion that I've seen online. It's regarding this two very weird phenomenon. On one hand, the US dollar has actually been strengthening against most currency in the world over the last 1 year. Yet on the other hand, even though the Hong Kong dollar didn't weaken, their stock market essentially collapsed on itself. So I think just some context, for those of you who didn't know, the Hong Kong dollar is actually pegged to the US dollar within a range. The interesting thing is, because of this peg, whenever the US increases interest rate, the Hong Kong Monetary Authority has to follow suit. This Bill Ackman has actually called out this very strange phenomenon before. Because Hong Kong is very reliant on China because of trade, because of investment, yet at the same time they have no sovereign monetary policy. And you can see this disparity playing out very starkly over the last 2 years, where you can see the Chinese economy slowing down significantly, exporting deflation to the entire world. Yet at the same time, US is experiencing sky-high inflation, very strong economic growth. That's why they are jacking up interest rate. So Hong Kong is basically like the poor child being stuck in between. And if you have to think about it, if the US raises interest rate and Hong Kong also follows suit, and if both of them have the same rates, investors are definitely much more comfortable and willing to buy up the US bonds. Which is why Hong Kong has to defend their currency by drawing down on their reserves to buy back Hong Kong dollars, and there's much lesser liquidity floating in the market. So the bottom line of this entire discussion is, Hong Kong actually doesn't lack good companies at cheap valuations, they just lack liquidity. So I'm not too sure what your read on this is, but I guess it's just a different perspective into explaining why the Hong Kong market is essentially collapsing. So on another note, there are also strong signs of bottom in the Hong Kong market, where the price to book ratio of the overall index has reached levels at around 0.8 to 0.9 times that preceded the three biggest rally. Similarly, where Bloomberg recently released an article with a 100% probability of an indicator when the spread between equity and bonds go beyond 5.5%. I'm not too sure. I think let's keep our eyes peeled on whether 2024 is finally our year. Last but not least, I think just one recent development where one of Singapore's fund called Asia Genesis actually shuts down after a big mistake on China. They essentially did a spread bet where they long China and they short Japan because they think Japan is overvalued while China is extremely undervalued. So I'll play a short clip where the CIO of Asia Genesis went on to CNBC to explain his view, I think sometime late last year.
You're probably one of the few hedge funds that's actually a little bit bullish China right now. What's the thesis here in terms of your expectations moving forward?
I think that not only I'm a little bit bullish, but actually strategically, in my study of financial market over the last 40 years, I think starting from next year, probably China stock market will offer us once in a lifetime investing opportunity, tremendous upside over a few years. There are a couple of reasons for that. I think the negativity on China has been ongoing for a number of years, The market has priced in the burst of the property market bubble. Yes, burst. The listed property companies' valuation are less than 10% off from their peak, The bond prices were priced at bankruptcy level. So I think a lot of all these negativities have been pricing, including trade and tech war. These are ongoing.
Now, I'm not reacting to this video in bad faith. I think I just wanted to draw out the nuance and the dynamics between a retail investor versus an institutional investor. So in my personal view, when I look at the Chinese equity space, it's getting more polarized on both sides every other day. So those on the bullish camp are extremely bullish. They think the bottom is in, they think that the Chinese stock market has an extreme risk to reward ratio. On the other hand, those that are in the bearish camp, they're extremely bearish. They are touting for a complete stock meltdown. They are touting for a complete destruction of the Chinese market. But on that note, I think one of the inherent advantages we as retail investors have is that we don't manage other people's money. We don't report to anyone else. We actually report to our own P&L. And we don't really have the pressure of performing every week, every month or every quarter, unless you're a YouTuber and you are extremely transparent with your positions. But that being said, I think staying in the game is a lot easier for us. And please use this advantage of yours and don't do weird things to shorten your time in the game, like leveraging. But anyhow, to round up the entire discussion, has Alibaba finally bottomed at $65? Please feel free to leave in the comment section down below. With that, I hope to see you guys on the moon in 2024. Goodbye!